Hi, everyone. I'm Erin McLaughlin, ACEC's Vice President of Private Market Resources, and you're viewing ACEC's YouTube channel. If you like our content, please like and subscribe. Today, we're going to go ahead and do our Private Market Resources and Economic Outlook for May. So, like with all of our monthly updates, we start by looking at the construction put in place numbers for the most recent month. So the information that came out in May is our March data. So what we're looking at is that construction put in place, which includes design and construction spending, was at $1.73 trillion in March of this year, 2022, which is almost 12% higher than at the same time last year. Now, this is the same, if you watched last month's video, this is the same trend that we've been seeing, which is basically pretty considerable year-over-year increases. They're all about the same as they were in February year-over-year. So residential is really continuing to carry the design and construction spending. It's up over 18%. Private non-residential is coming back pretty strong, up almost 9%. And public spending is fairly flat, but is on the way up after dipping quite a bit during the pandemic-caused recession. And we expect that number will continue to rise as IIJA spending starts to happen later this year. Now, this is just a chart that shows sort of a 7-year back or so look and how our increases are going. And as you can see, that public number has remained pretty flat. So I'm really curious to see how that green line on our chart continues to go as we, again, look forward to IIJA spending. Now, as many of you know, we belong to and closely watch the National Association for Business Economic Surveys. So their most recent survey, which was just released a couple weeks ago, is their quarterly business condition survey. So there's a couple key takeaways that I wanted to share with you from the survey, where they basically speak to about 50 economists and analysts from different industries, both here in DC, on Wall Street, all over domestically. Now, the respondents, 70% of them called out wage pressure as being really, really significant. And in fact, that was the highest number in the survey's 40-year history. And this is the 7th consecutive survey where wages increased. And it is up 10% from being 60% in January's survey. Now, cost pressures is really a great part of that. And the majority of respondents said that they are passing along cost pressures to their clients, which, you know, this is for all different industries. So not particular to the design and construction industry, but something unique to note. Now, when economists talk about the economy, they often talk about downside risks and upside risks. Basically, what is the biggest bad thing that could happen and the best good thing that is happening? So right now, the greatest downside risk is that increase in cost pressures. And now we're certainly feeling that in our industry, which is professional services, which remains about wages. Now, I was actually delighted to see that the greatest upside risk that panelists, that respondents indicated, was sort of an easing up of supply chains. And that's pretty exciting because maybe, fingers crossed, this will mean that inflation will start to come down. Speaking of inflation, so the number, they actually just came out this morning. I don't know when you all are viewing this, but it is May 11th, and we heard that in April, the CPI did remain at a really, really high 8.3 annualized rate over the last 12 months, but it has dipped a tiny bit from that sort of rolling annualized increase that we saw in March. So it will be very interesting as the months go by to see if some of the interest rate hikes that the Fed is doing and some of the other monetary policy exercises are beginning to lower inflation, and to see if we can have what economists hope will be a quote-unquote soft landing from the situation that we're in. Now, as many of you who are following the business press are probably thinking, what are we going to fall into a recession? Are we going to have that soft landing, or is it going to be a hard landing? Because when you try to slow the economy by raising interest rates and doing other things, we do, of course, have the potential for having a recession. So they asked, actually, in this case, 80 panelists, what do you think the probability of a recession is? And it was very interesting to see that the majority of them And on the chart that you're seeing, I've circled sort of the majority opinion, so to speak, between, most think that it's between 11 and 50%, certainly is a very broad amount, chance of us falling into a recession. So basically less than half. However, there is still a fairly good chance that we may. So, this makes us sort of stop and think, what is the definition of a recession? So I looked it up for us, and there actually is no technical definition of a recession, but generally most economists and analysts take a recession to be a period of decline, and generally that means 2 quarters of decline. So we'll be keeping an eye on GDP to see if we do have 2 quarters of a decline, and often, as you all know, we don't really know if we're in a recession until we're in it. And hopefully, if we do go into one, it's really about landing out of this strange economic period that we've been in, and hopefully it will be shallow. So going back, we talked about interest rates. We talked about the concept of a soft landing. So it's really that role of the Fed, and we saw them just this past May 4th. They did raise their base interest rate another 0.5 percentage point. They had done it also back in March, a slight raise. So that is really one of the only tools that, our government has to control monetary policy. So, this will help curb inflation and may help curb some pressures on our economy. But for our members that are interested in home building and are doing a lot of land development and are part of that market, it will also be interesting to see how much of a cooling off we see as a result of those interest rate hikes. And as I did last month, I did want to just leave you all with a couple slides that really speak to the moment. We continue to have a really, really strong economy with unemployment rates at near lows. The interest rate held at 3.6% again for April 2022, which begs the question, are we at full employment? And most economists would say yes. And sort of like with a recession, there's no standard definition at full employment, but within our professional services sector, it's even lower. Unemployment in the engineering, architecture services fall under professional and related occupations. Our unemployment continues to be at 1.6%. So I don't have to tell you all what that means for our industry. Is that we are really competing for the best talent. We're paying our people more. And we also have a worker shortage, which puts a lot of pressure and wage pressure on our engineering and architecture economy. And again, this results in that pressure on wages and salaries. And so we are seeing, and this chart is actually from BLS, and it shows wages and salaries for all private industry. So this is not particular to the engineering and architecture industry, but again, 5% year over year increase. And that's very similar to what we're hearing from our members. So with that, I thank you all for listening, and I hope you're doing well in this very different economic landscape that we are in. If you like what you are hearing, please visit our other resources, which include our monthly economic presentations, information on our upcoming symposiums, our private industry briefs, and our columns, all on acec.org. Thank you.